All right, it is that time again. It's 9 o'clock Friday Eastern time. I just want to welcome everybody who came in and was having a nice dialogue with me before the live stream. Welcome to the Independent Investor Channel live stream. My name is Ryan. I've been running the channel now for about 3 years. This will be live stream number 73. Ton of great stuff to talk about this evening. I've left some links at the top of the live stream feed for you guys. Obviously, the same links to the discount brokers, the first being M1 Finance. There's a reason why I do that. If anybody is new to the channel, new to the resources that we push out there, the one of the two affiliate links is M1 Finance, the second being First Trade Financial. I personally have accounts with both of those brokers. We're rolling that out to provide options for folks in the brokerage world. There's been some broker discussion tonight in the group. Obviously, we will get to some of those obvious changes and improvements in the investing landscape. What an exciting time to be an investor. There's been some real radical changes, some mergers announced this week that will absolutely look to help individual investors, which I can tell you guys been investing for over a couple decades now, and the environment just was not like this before. There was Jason Mack Investing is in the group tonight. He had a live stream on Wednesday, and I wish I could have elaborated a little bit, because I could tell that some of those cats on there were talking about the $7 and $8 entry and exit fees as if that was a real pain in the side, and it absolutely is. You know, we're going to zero in the investing world and providing that access for individual investors. But it wasn't too long ago that I was with Edward Jones. They were the last broker that I kicked to the side. It was a great day for me, but $50 for the entry. The real kicker was, and I've told this story throughout the history of the channel, to exit a position that I had in Duke Energy. I was up big. I was up about $1,700 in the position, and that stock trade did not cost me $50 to exit the position. It cost me $300 to exit the position. So for you guys that are making their way to the channel for the first time, and we roll out opportunities like an M1 Finance, First Trade Financial, those brokers being discounted as they are, a lot of the major brokers out there are moving to zero. Obviously, the elephant in the room is the Charles Schwab announcement this week, looking to purchase TD Ameritrade. I think it's fabulous. I think the beneficiaries of those mergers will be those individual investors that are either part of Charles Schwab or giving new investors the opportunity to consider just going with a major broker. But I know there's a lot of people in the channel that come on and they want to grab their opportunity through M1 Finance. And a lot of people have a very, very satisfied they're very satisfied with the product, as I am. Okay. I've actually shared my spider portfolio in this group. I've shared the simple portfolio, that of which we'll talk about tonight. It has all of one holding in it. So for beginning investors, it could be just as easy as starting your M1 Finance account, getting your exposure started in the S&P 500 in as little or as much as you feel comfortable with, always looking to control your exposure limit to the market. But you can do it fairly simple through that one product. I've shared that with you guys as well. And finally, the last link is the knock list. You guys are welcome to check that out. Give yourself a test and see how many of the Dow Jones industrial stocks out of the 30 companies that are represented can you actually name. And it wasn't until tonight that I actually identified how many of the Dow stocks I actually own in my portfolio. Perhaps maybe some of you guys have picked up on that. I didn't actually until tonight, but I've I've often contended that if you're a new investor to the market and you're confused by the landscape and the thousands of different stocks that you can own, I would encourage you to take a more simplistic approach to it and look at it in this manner. You've got the S&P 500 made up of 510 of the medium and large capitalization stocks in the stock market. Very important to start there, and that's where your ETF products come in. That's your flagship baseline diversified product that you can put into the portfolio to start. And then if you're looking at single stock allocation just for an awareness perspective, or you're looking at just broadening your knowledge of what's out there for investment, start with the Dow 30. You're going to recognize almost, if not all, of the companies that are part of the Dow Industrial 30. So I've provided that link for you guys. We're going to double dip this weekend. Obviously, if you guys are following the channel closely, I'm excited to announce my first collaboration that I will be hosting with Lydia Santiago, My Investment Journey. Lydia has been with me for a long time. Lydia became a featured channel of mine when she had maybe less than 100 subscribers. She didn't have very many. Now she's well over 1,000 subscribers, and I presented the olive branch the opportunity, and she said she had a few moments this weekend to do that. So we will be putting another live stream on tomorrow, a collaborative live stream. It'll be a lot of fun. I'm looking really forward to that. I think it'll be awesome because the reason why Lydia entered into my featured channel list so quickly was because of her passion for investing. That's it. Okay. And there's nothing short of validation for me each and every day with the interactions that I have, both at work or the people that I come into contact with who really will never have the passion necessary to not only get involved in the market, but actually succeed in it. Okay. And we're going to talk a little bit about that. What does it take to get involved in the market? And what does it take to actually succeed in the market? Okay. So I just want to welcome everybody into the stream. Those links are provided for you guys, but I would love to cordially invite everybody to come on tomorrow and help me. I've done everything that I can possibly do to promote her message. And I don't think it's I don't think it's too much to kick on. Throw your subscription in there and show some support. Comes from a very unique perspective in investing, which I like. It's she loves quality companies, loves the investing, and I think really enjoys improving her approach to the market. And I think there's some real takeaways to that for anybody, myself included. I'm just a student of the game. That's it. And I would expect that if you find your way to the message, we're looking to appeal to real people. Okay, the real people who come into this group and maybe admit that they're not perfect, or they're making some moves in the market that makes sense to them at this particular time, and that's just awesome. This is absolutely an open forum, an open community of folks that can come in and engage in just that. The people who need this message are everywhere, and it's infinite. I was just presented with the opportunity maybe yesterday to reach a little bit. I think there's people that are much younger. I think people need to get this information at a lot younger age, and especially in some of our inner cities, speaking more in the United States. I'm sure this is applicable worldwide, and I'm just the person to do it. But to speak along the importance of financial stewardship and getting those techniques and habits in place at a young age will really help you later on down the line, when it's not a matter of whether or not you made the right decision early in life. It's going to be what decision you want to make as a byproduct of those decisions that you made earlier on in life. There's a lot of decisions being made here in the community of taking some profit. Now, you couldn't have made that decision had you not taken a little bit of strategic risk to enter into position. Okay. The only guarantee that you're going to have of no loss or no gain is to not ever have invested at all. And I'm just not one of those folks that like to approach my life that way. I am very calculative with my approach. I'll share some of the strategic moves that I've rolled out this week, really aimed at putting some layers and some options in place for myself if we do enter into somewhat of a downturn in the market. So I will roll those strategic moves out to you guys. I think you're really, really going to want to stay tuned for that, and understand my thought processes and how I'm utilizing my multiple buckets and how I'm using different strategies in each of them. You guys know that I've got 6 investment buckets that I do talk about the most often on the channel. The first trade in the M1 being the discount brokers, the affiliate brokers with the independent investor channel, both taxable accounts. I took a little bit of we ended up funding the first trade up a little bit. That is launched right over $6,000. So had the account since March, and we're going to be at that $10,000 mark here shortly, and I'm ecstatic. I wasn't trying to manufacture this up to 10,000. I was really trying to emulate what a new account holder could do if they had a dollar cost average. And I've got a few dogs in that account. I did the rollout this week, and you guys know the Nokia position has been a real downer, as well as the Halliburton position in that portfolio. But with that said, I still continue to fund that account. I have not taken any proceeds from the first trade account. We added 5 shares of Kinder Morgan just this week. I added 2 more shares of VB, which is the Vanguard's small cap blend. It's a blend between value and growth small cap. That's kind of the foundational holding in there, as well as another foundational holding, which is SPHD, which I know JMac Investing is an investor in. He's an advocate of that product. It's the top 50 dividend payers from Invesco. So you guys can Google these. I can't put links. It'll get too busy in the thread here, but thought for interest sake, I would let you guys know about the strategic improvements in each of those accounts. So that's the first trade account, $6,337 in there. Started with a nominal starting amount in there. And then I do fund that you guys are very aware. I take my YouTube earnings, at least the ad revenue section I make multiple income through YouTube, but the ad revenue section is the one that flows over to that first trade account. So it's kind of an asset that funds another asset. Okay. And then that asset I've got set up for, of course, dividend reinvestment, and the ability to roll those dividends and basically fund itself. I was kind of looking back through the history, and it's been kind of fun to watch, little dividends paid when you start. That's the cool part about it, man. When you start out and you get paid your first $2.57 dividend, for doing absolutely nothing other than owning a stock, that'll be memorable for you. And those are the types of things you cannot appreciate when you start investing. So really, really cool. And that's kind of why I'm chronicling that journey for you in the first trade. Might not be the greatest account. I really think Charles Schwab is probably number one. Lydia Santiago did a review on I think she is with TD Ameritrade right now, did a really good review over that. And, there's just so many good options now. There's no reason for you not to be introduced to an optimal product now. I just really want you guys to have some appreciation for where we've been and where we are. Okay. So it's just an exciting time, man. I'm super, super stoked. And I don't know if I'm so rooted in with Merrill. Merrill was just rated here. I came across a survey online. Merrill was rated number one for self-directed investing. I'm a testament to that. I think they're fabulous. So, whatever floats your boat, remember the aesthetics of the platform is one that you've got to be satisfied with it, both on the mobile and the desktop version. So, choose wisely, but I don't see that there's any other excuse not to trip and fall into a broker that's really going to meet or surpass a lot of your needs nowadays. It's a freaking exciting time to be an investor, no doubt about it. So I've just got an absolutely killer group in here. There's just a ton of people that I need to call out. Hidden Freedom Investing was one of the first channel creators that popped in here tonight, but absolutely want to thank Bob Wright and Greg Cammey and Linda Jones and All Good for the conversation before the live stream. Avi A. and Mr. Jeff Koski was part of that. Jeff's laid up, I think, or has just got out of or in the hospital tonight. And looking at the bright side of things, he says that he could tune into the beginning of the Independent Investor live stream. I'm humbled. My thoughts go out to you, man. Be strong and get well. We're with you, certainly. I think a lot of people look at this as a family community as well. And I think people prescribe to the message because that's the feeling they get. And there's a reason why they get that feeling. It's because it's real. Okay. These are real portfolio moves. This is about as transparent as I can possibly get and make people understand that I'm serious about this stuff. And for the folks that aren't interested in investing, discussion, awareness, etc., I look at this as being some of the most important 2 hours of your week that you could spend coming online. And even if you just sat back and you didn't engage with the community, there's so much benefit to your financial health and awareness that you could have. Look at the information we've already thrown out in 15 minutes, guys. Talking about the $10,000 barrier, the Charles Schwab merger with TD Ameritrade, another collaboration double dip tomorrow, all of which costs you nothing. It costs you nothing but a little bit of time. Okay. And I do understand and acknowledge how busy people are. But if you can just spend a few moments coming on and checking out the message, I think you'll be more financially fit for it. I think you'll be more savvy. And I contend that a lot of people require a lot of work on that front. They really do. So welcome to the Independent Investor Channel live stream 73. It's great to be with you guys. So the strategic increase to the M1 finance account is worth talking about. I'm going to throw these strategic improvements to the buckets that we are working with. First trade is the taxable. M1 Finance is the other taxable. Those are both of the affiliate programs that we have through the channel. You guys know that I invest in M1 Finance through the 11 sectors. I split them up. I do weight them how I want, technology being the highest weighting. You guys are welcome to check that out. The link to that technology pie is the sector specific pie is actually shared at the top of this link. You guys can check that out and see how I seek my exposure. Otherwise, you can just check out the M1 Finance review video that I released this week. I chronicle it. I jump into the account and show you everything I'm working with. But since then, I've actually taken a funding of $500. And I know some of you guys may say, well, that's not fair, Ryan. You're racing it ahead. And that's not true. I really want to emulate a new investor who is freaking serious about investing. Okay. And what is going to happen when you're doing $25 a week or $25 a month for some many months is if you're real serious about your financial future, that $25 that I kind of tricked you into starting, because $25 is not going to grow very fast. The idea is to get over that psychological barrier of paying yourself first. Then you'll reach an impact where you're like, you know what, this is kind of cool. Had I invested a little bit more, I'm up 11% in that small portfolio. Okay. What if I gave it a little bit of injection? What if I get a little bonus at work? What if I get a little raise? What if I get a little inject of tax return? Okay. I've made videos on this. Instead of going out and buying a 75-inch television, why don't you think about bumping up your retirement account a little bit? Maybe bump up another taxable brokerage account if you're already maxing your Roth IRAs. Okay. Think about paying yourself first. So that $500 was indicative of my desire to get that thing up above that 500, excuse me, up above the $2,000 mark. And we've done that. We are at $2,499. And I also changed the $25 a month to a biweekly schedule. So now I'm going to be doing it every 2 weeks. $25 will automatically invest in the M1 Finance Pie, and that is an increase net of $25 per month. So didn't change anything, didn't sell anything, didn't change any of the allocation, nothing changed in that. And if there's any takeaway at all with how I strategize that M1 Finance account, pay attention. I don't buy and sell in that account. I've started the account the way that I've wanted it, and I've stuck to the plan. I don't finagle in and out of that. I really think that there's some value in hearing me out on being and really maintaining a passive strategy. For new investors, that means that you just fund it up and you can forget it. Buy a diversified asset or a bucket of assets, like I've demonstrated to you guys, and just fund it over time. Put it on a true dollar cost average schedule. Let it fund itself. Check in on it every 6 months, and you'll be surprised at where it is. That's why I've provided the S&P 500 portfolio, the link to the one portfolio with the one holding in Vanguard's S&P 500 fund. I think for any new investor that makes their way into the channel for the first time, they can be like, God dang, wow, this is interesting. This is easier entry, easier than I thought. This isn't quite as hard as I thought it was. My own personal barriers weren't quite as true as I thought that they were, because Ryan just kind of broke this down for me and has actually provided me an example of that portfolio. Now, the cool part about it is if you click over and check it out, you can actually back test the portfolio and see for yourself, had you invested at any time during the previous 10, 15 years, 5 years, etc., you would have made money. So you can prove it to yourself. You don't need me to talk you into anything. I can definitely get you excited about the prospects of investing. I think the real takeaway that I insist on for most people who come to my message and do get excited about investing, that we make sure and set them up to make sure that they can stay the course for the long term. It doesn't do us any good to get invested only to be scared out of the market at the first hiccup of volatility. And I know there's people out there I can talk till I'm blue in the face that we'll lose. We'll lose them. And it's tough. It's really tough. I review Joe Carlson's videos pretty frequently. He's one of my favorite YouTubers. Number one, because he's freaking just amazing content, very smart, very easy to follow. But the video that he had was "You Will Sell in a Recession." And it was actually in reference to a comment that he got through the channel. And the comment was really, it touched me for sure, because the investor had obviously gone through some pretty hard time during the downturn in 2009, 2010 timeframe, and was basically talking about losing their job, losing 90% of their investment portfolio over that time, and was basically saying, look, it's easy said than done when the market is doing this. And you guys know that I hint on this all the time. There's not a message that I put out where I don't talk about this. I brought it up Wednesday on JMax live stream, and he was like, oh, there it is again. He talks about this all the time. And there's a freaking reason. I earmarked 50% to drive home a point, because if you're invested in the S&P 500, I would question your investment choices if your portfolio was adjusting back and you were down $9 out of every $10 you had invested. Because this individual, I don't know if they were trying to drive home the point. I didn't see the numbers. I didn't know the makeup of the portfolio, man. But if you're losing 90% of your dollars during a recession, I would question the strength of your portfolio. Now, what are some of the fundamental takeaways from this? Fundamental takeaways are to look at the portfolio structure in and of itself and making sure that there's diversification built in, because I've been through this as well. And people who want to nitpick at people who want to invest and find some financial security for themselves going forward will kind of play this game a little bit. And in all fairness, you have to be critical over your own program as well. Am I diversified? Do I have an emergency buffer that's available to me to maybe buy the market strategically if it does go down? Was I over levered to the market? Was I over levered to the market in relation to the lack of job security that I had? Right? Was my job subject to market fluctuations or volatility in the stock market? In other words, when things get tight with the economy and I suffer from that, am I too heavily levered to the market where my market value is going to decrease so much, and I'm also going to suffer because I run the risk of losing my income, right? Those are all things that you actually have the luxury of thinking about ahead of time. And I didn't appreciate some of the lingo, hey, you're young, you don't know anything about the stock market. I would defend Joe all day. That guy, there's no doubt about it. He will succeed through a downturn in the market. His fitness to the market is top notch, as a lot of you guys are. You understand that key factor. But that's kind of why I run you through that rhetorical exercise where, when everything is calm as can be, ask yourself, hey, could I handle a 50% haircut? It's the half-life exercise that I talk about. Could you look at your portfolio and say, God dang, wake up next week and you've lost half of your value? And there was definitely some takeaway from that, and definitely want to try to psychologically prepare everybody not only to get excited about the market, but to also understand um, the long-term aspect and what the market can provide to investors over the long term. And another just takeaway that I got from that was looking at the stock market at any specific time and justifying the move that you think you need to make because of what you're looking at that isolated time frame. What I mean by that is this investor or commenter, um, it basically admitted to selling all of their investments when they were down 90%, okay, because they were afraid of it all going to zero. That was the rationalization. Now, the rationalization that I was able to glean from that decision is that that decision was made on the spot because of an emotional observation that, yes, their portfolio was down 90% of the time. Now, again, not justified, but this is what the individual said happened to their portfolio. Never, ever make a short-term decision on the market. The rules of thumb in the stock market are so simple, but they are the easiest to misconstrue. I see it all the time. I'm guilty of it. Okay. I'm no hypocrite. I'll just tell you, I probably sell too much in my portfolio, which in fact, my strategic goal long term should be to buy and hold stock over the long term. And you guys will see that some of the moves that I declare to you in the remaining three that I'm going to talk about tonight are indicative of that very movement away from more passive, movement away from more single stock and into a nice diversified base in the portfolio. And I'll declare those moves to you guys. But Definitely want to thank those guys that made their way on before the live stream. Had a great conversation. Very cool, Jeff. Just get well. I really appreciate you. Linda Jones came on and said she enjoys the channel. That's pretty cool. She was cooking and multitasking and watching at the same time. And it's really cool. I'm humbled at the opportunity to jump on the collaboration with Lydia tomorrow, because not only is she an aspiring professional, but she is in fact a woman. Okay, and I've got about 4% of my demographic that come into the independent investor channel that are in fact women, and that is not satisfactory. It's not. Because not only do men and women need this information, but all ethnicities need this information. People across the world need the information. Financial stewardship really doesn't have any type of like certain people deserve it and other people don't. It doesn't work that way. Everybody needs this information. Unfortunately, I think everybody is in the same collective group in that going through high school years and even maybe into college, unless you electively take some of these, you're not going to have a financial background. You're not. And if we started teaching this stuff to our kids, we would have a lot more kids coming out that were interested more in aspiring to be CEOs or CFOs of companies, being CPAs, okay, having more of a financial discipline for their own personal budgets, right? And we wouldn't live so much like hogs all the time in a consumer driven society. They would acknowledge that, yes, that's what we live in, but at least they would be able to deploy a little bit of discipline. But I'm certainly looking forward to that opportunity tomorrow with Lydia. It's going to be awesome to hear her thoughts. I will get you an agenda tomorrow. I've just been super busy this week, so I apologize for that. I think we're all hooked up and ready to go. It'll be a lot of fun. The collaborations are a lot of fun because I think in spirit of bringing people together to talk about a subject that is not talked about very often, I think is the key takeaway. And I think a lot of people come in and they're like, wow, this is interesting. I never really thought that we could talk about this as openly as we do. And I contend that not only can we, but we should. Okay. We need to kind of get over ourselves a little bit and open up a little bit with, who you're using, what your strategic plan is, what your age is, what your tolerance are. Start throwing some of those financial goals down on paper, start to follow somewhat of a plan. All good. Hit me up and was asking me an interesting question at the beginning of the stream. And she said she's kind of going back and forth between the fixed and the stock market, and is kind of investing on a whim. And I thought that took some real courage to offer that in the community thread. But not only did it take courage, but it's downright honest, because she, along like a lot of other people, are investing in the same way. It's difficult not to get involved and then second guess your decision, only to talk yourself off the ledge, pull back, maybe take a little profit, only to see it go up again. You go crazy doing that, right? But her question was specific to the balance between fixed income and equities in the portfolio. And I said, well, it makes sense to have a good portion of your portfolio in the fixed income, but it sounds like you still want to have a little bit of allocation to the stock market, right? So the beauty in it is that you can kind of control or throttle your exposure limit to the market, maybe by doing a 75-25 portfolio, 75 fixed, 25 in the market, and good to go. If you don't like that allocation and you think, 25 is not quite enough, then fund it a little bit. Look at the market and allow the market in its current condition to help you make some of those decisions. In that, you know what, the market is at an all-time high right now. 25%, I still want to be involved in the market, but 25 is about good for me. And if your perfect number is 32% and you start at 25, great. Err on the side of defense a little bit. It's okay. Stop beating yourself up a little bit, going back and forth. You can do both. It's totally fine. The trick is to finding that exposure percentage that is appropriate for you. Okay. And that's a lot of what I've done this week is take some of my percentage and reallocate those percentages, for a lack of better term. Interesting enough, if you guys have any idea of how many of the Dow Jones industrial stocks I'm actually invested in my portfolio, you're willing to take a stab at it. I'd love to see some of the guesses at the bottom of the live stream. I think it'd be kind of funny, but it really hadn't dawned on me on about how many that I actually do invest in. I will tell you the four that I don't invest in, and that may give you a little bit of a secret. Goldman Sachs, Travelers, Walgreens, Boots Alliance. You guys know I invest in CVS anyway, and American Express. Those are the four that I actually don't have exposure to. The remaining 26, I do. Okay. So I'm not one of those guys that will come on here and think that we need to find a needle in a haystack when you're investing. If you want detailed, detailed insight on some of these companies, two of the companies that I don't invest in, Gen X Dividend Investor does invest in. Kick over and check the tutorial out on Goldman Sachs and Travelers Insurance. You won't be disappointed. All right. And I'm actually going to play a little game here before the hour is up, and I'm going to try to put some guesses out there for the remaining Gen X Dividend Investor holdings. Now, I didn't catch the video of the live stream tonight, so I don't know what the reveal was, but I am going to take a stab at what I think. I've got 15 picks here that I think are the remaining picks that Gen X Dividend Investor may roll out. It's a complete guess. There's been no collaboration whatsoever, but I thought we'd have a little bit of fun and throw those out there tonight. I also found this ironic, but the top 5 performers in the Dow Jones Industrial Average today, I own them all. Pfizer, 3M, Boeing, Nike, and Johnson & Johnson. Awesome stuff, huh? Now, the ironic part is I also own the 5 laggards in the Dow Jones Industrial Average today. I will, in all fairness, I will roll those out. Intel, ExxonMobil, Walmart, Home Depot, and Visa. So those were the laggards today. I own all 10. So on both ends of the spectrum, I was like, oh, that's nice. I own all 5. And then they showed the laggards, and I was like, oh, cool. I own all 5 of those too. And that's the cool thing about owning those big blue chip companies, is that they're a lot of fun to invest in. You know, if every time you pull out your wallet, you're probably pulling out a Visa card of some sort, whether it be your debit or credit. These are companies that are well established. 3M, Boeing, of course. Anybody who's ever flown, Nike, Johnson and Johnson. You guys get the picture there. But I thought it was pretty cool. Keep that in mind when you're doing those portfolio reviews with me and you're observing how it is I seek my exposure. Collectively, those stocks are powerful, dividend paying aristocrats, that just have done nothing but make shareholders wealthy over time. So I have 12 of the Dow Jones stocks in my wife's account, and I have 14 actually in mine. So just a fun fact to kind of throw out there. And it was something that I had built up in the portfolio and really didn't know that quality was in there. But kind of a fun little nugget to throw out there, that not only do I have those S&P 500 through the VOO, the VTI as well. I'll show you guys where I've strategically placed those tonight on the live stream, and the rationale behind why I've placed those in the buckets that I have. Okay. So Jeff Koski talk a little bit about taking some profit now. I think that's prudent to do so. That's totally fine. Markets, the Dow's up almost 20% this year. It's just been on fire. And All Good says, was my first live stream, and I just totally was awed by Ryan's wisdom and knowledge, and I'm hooked ever since. Well, my wisdom and knowledge is only as good as I can transcend to the group. That's it. Okay. Again, I've said this many times. I can be a really good bookworm, and I can make myself a multimillionaire. If I can't scale that and help other people, then I don't really see a whole lot of value in that. Okay. And it's much, much more difficult to try to find those unique common threads that anybody can come on and relate with. That's the key. Okay. Because I know what works for me, but what works for me is not going to work for the masses that come onto the channel and are looking to seek out some awareness about the market and how they as well can participate in the market. I contend, yes, my portfolio has been built up over many, many years, but I would be just as excited, and I expect you to be, if you're only holding in your self-directed Roth IRA account is the S&P 500. I expect you to be just as fired up as me because you own pieces of those large companies, Google, Amazon, Microsoft, Apple, Wells, JP Morgan. You own a piece of those companies as well. And even though you might have not have the tens of thousands of dollars yet, at least it's a start. And yeah, you got to start somewhere. But I really appreciate that comment. But again, you guys kind of know I take these comments in stride a little bit, and I always try to throw it back on the success of the people coming onto the message. I'm not doing YouTube to come on here and just blah 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 for 2 hours. I'm not doing that. I'm really, really trying to reach those people that would not have been reached if it wasn't for the message. That's where the power lies. And verdict is still out on how much impact we're making. I know there's a lot of people who review the content after I post it to YouTube. That's totally awesome. But the real impact really is defined by the receiver of the message. I totally contend that that is the measure of success in the channel. God dang, the chai tea's good tonight. Holy smokes, it's good. It's good, guys. Really good. Anyway, Linda Jones threw out the question, has Schwab started doing fractional shares yet? And I think All Good has actually started to invest with them. That's a connection I believe she made on the channel through Mr. Bob Wright, who has been with Charles Schwab for a while now. And so that connection was made. That's pretty good. But she says that it's not going to happen until first of next year, if not into next year with the Charles Schwab fractional shares. But Jesus, that's a game changer, man. Holy smokes. Charles Schwab, based on consensus, has probably moved to the top of my recommended brokers worth looking at for sure. And it's a broker that I don't do business with. So I'm impartial. I could care less, to be honest with you. It just, I have a very, very specific, the broker is not going to make you rich. Okay. It's your plan. It's your execution. It's your discipline. It's your freaking mental toughness. There's going to be a time when you just say, "F it," and you got to go with your plan. You got to go with your plan. Do what you got to do, man. I solemnly swear not to sell when my account is 90% down, even though I look at my account and am cursing myself up and down for getting involved with the stock market. This was the worst decision that I have ever made. However, I am going to remain true on my program. So help me God. Okay. Because it can be one of the biggest, it can be potentially one of the biggest setups for failure. The silver lining of the story of the investor who loses 90%. And again, I didn't get to look at the particulars of the portfolio. And usually there is more to the story than just I lost 90% and therefore you're going to lose it all too type of response. There's usually more to the story than what's on the surface. And typically when I have, and I very rarely do have the opportunity to say, well, hold on, what were you invested in? For Christ's sake, what were you trying to do? What was your financial goal? And if those can't check out for me, then I typically would say, you know what, I'm sorry, but your approach was wrong. Your plan was wrong. Um, Remember the very root on the independent investor channel being self-directed. Okay. If in a hypothetical, you're 90% reduced in your portfolio value, you are still in receipt of the biggest strategic advantage that I can provide to you through the channel, and that is that you are a self-directed investor. Okay. If you have representation, you're paying those fees no matter what. You're paying the fees if you're up 20% or up 100% or you're down 90%. Now, I just used the 90% as a hypothetical just to drive home my point, because each and every one of you guys has the opportunity to grab the very root, the very nerve, the very epicenter of opportunity that we put through on the channel, right? It's the very nucleus that provides that opportunity here. Okay. And I'm the only one that can provide it. There's people sharing the message that are self-directed investors, but you're not going to see it declared to the masses through the media. You're not going to see it through the internet either. Okay. It's going to have to be something that you seek out and validate. Okay. Because it does exist. Seeking it out is going to be pretty easy, but validating it for yourself, most people would look at it, if they were ill prepared to accept the responsibility of managing their own finances, they would look at that situation. And if they were ill prepared for a 90% haircut in their portfolio, they would look at it and they would talk themselves out of that position. They would say, what in the hell was I thinking? Who do I think I am investing in the market on my own, without the assistance of a financial planner or some sort of professional representation? We feel naked without that representation. And most people, if they are ill prepared and they have not done that validation behind why the hell this is so important, they'll talk themselves off of it. Okay. And they'll say, you know what? I'll never, ever do that again. I'm just going to put my money with a financial planner, and that's the end of it. I will never, ever invest again, or I'm only going to invest in this manner. And it can be really one of the biggest setbacks financially that you ever go through in your life. So go through that self-deliberation for yourself. You'll be glad that you did. Okay. Don't be naive about the market. The market is going to do what it is. The market is going to do. The trick is to prepare for all conditions, because the subscriber who made the comment on the Joe Carlson video, even though my heart went out to him or her, because I don't think that they were alone. I think there were a lot of people that lost money. The people that you probably aren't going to hear from quite as often are those people who made out like bandits during that same time. The people who held true on their program. Why? Because they had the discipline and the mental fortitude to get them through what they perceived to be a hard time at the moment, but they did not sell out at the expense of their long-term goals. That's the key. And I would say this to each and every one of you. At some point in your self-directed investing career, you are going to be faced with that same impact, that same decision. And I'll do the very best that I can to talk you through that psychologically. But at some point, you're going to be faced with that decision alone. And there's not going to be anybody there to help you other than yourself. And the preparation that you've put in to this program is going to determine whether or not you can persevere past those barriers. Okay. All right, just something to think about tonight. As you think about your evolution as a self-directed investor, what the hell this even means to you, why you're drawn to the channel and the community message that we put out, why you're drawn to the support structure. I think this is a new way of looking at and approaching finances. I think people go in and seek therapy all the time to get their noggin right. Okay. But nobody ever seeks out any type of real assistance, man, some self-education on how to build up their financial awareness to their own finances. I think it's a real tragedy, and we'll keep continuing to push out the message for people and providing that opportunity. Okay. Um, Scroll down here, the questions. I got the Dan. Welcome to you. It's great to see you. And Greg, Cammy, thank you for the discussion this week. Pretty awesome. I always look forward to those with you, Greg. Thank you for tuning in from California. It's awesome. I appreciate your time. And Hidden Freedom Investing has popped in, show some support. And the one and only Doug Whitaker. Hell, it wouldn't be the same without you, brother. No doubt about it. Just appreciate the heck out of the long-standing support of the channel, and hope we're striking a nerve. I aim to strike at as many nerves as I can during my 2 hour opportunity, and I've almost burned my first hour. So it's the quickest 2 hours for me because I love finances and I'm just the guy to do this. I don't know how many other people have the energy to talk finances like I do for 2 hours, inside and out. I really enjoy it. Just left sunny Seattle yesterday for snowy Denver. That's pretty cool, man. Two of my favorite spots. I'd like to check out Colorado more. It's awesome. So let's get down into the nitty gritty here. I already called out Jason for sure. That was a cool live stream. It was cool seeing Dennis on there with True Financials. I've watched him grow his channel since he's just started. So it's kind of cool to see those folks that have persevered and said that he's doing it for a living. He's got more courage than I do. I couldn't foresee doing this. I throttle my YouTube opportunity to about just to about enough to keep me sane. But I'm 42 years old, guys. Okay, and the social media addiction thing is really is not cool. All right. I use and abuse YouTube for what I want it for, and that's it. I don't think about it when I'm away from it because, quite frankly, I couldn't see myself coming on here and doing YouTube every single day for a living. Okay, I could absolutely see doing YouTube on my terms. And as long as it's not ever about the money can come. It doesn't need to come. I don't really care. If it ends up making me a millionaire, I could care less. But it has to be on my terms. That is what I'm adamant about. Will not be selling out on YouTube. Forget it. Never. Anyway, good stuff. I can surely emphasize and got into a pretty in-depth conversation here at the top of the stream. David Strauss and David Mathis have popped in here. Victor Hernandez is in the group. Says good evening, appreciate it. My long positions. So we've got some MJ stocks here thrown into the. So you guys that are interested in those, you guys know I don't invest in that. Not at this point. And Lydia Santiago pop in the stream for the first time. Again, guys, certainly want to help us support the message. This will be the first one that I put through on the channel. So it's only fitting and right. Honestly, Lydia's been with me for a long time as a featured channel, and I know I am one on hers as well. And I would do anything to support her. It was kind of funny, a small story I kicked on this week. I left a comment on her channel. I don't watch a lot of YouTube, so for me to kick on to another channel, it's because I found a few moments to kick over and just on a whim pick up a video. And it was funny because I was able to compare what she was doing when she first started, because I hadn't watched any of the videos since then. It had been a while, and her approach was really good. It was really polished, man. She sounded like a professional blogger or professional podcaster. It was just an awesome tutorial of the TD Ameritrade platform. I thought it was awesome. So really looking forward to that, certainly. And if you're available tomorrow, we would ask that you come on and support us, engage in some investing dialogue. It ought to be really fun. It ought to be really fun for me and her to bounce ideas off each other, because we're both pretty fired up about investing. So it might be interesting. It might be it might be one of them, which is great. I welcome that. That'll be a lot of fun. Hit the like button, everyone. From experience, you will like or love it. Yeah, I guess so. I'm trying to look for that one person that I haven't got to yet, and looking for that person, maybe sitting back, listening to what I'm saying, and maybe not saying a whole heck of a lot. But GE has made a nice bounce. It did. It covered for me, so that was nice. Excited for your collaboration with Ryan. That ought to be good. Looks like everyone came early. Greg, I'm in Koreatown right now. It's 64 degrees, not bad. Yeah, it's the way Southern California is, you lucky. I missed my time out there. It was pretty cool. Awesome in action for the layman people. You bet. You bet. Regular investing, man. Uh, and it doesn't have to be one of those things where I think people have a misconception about the stock market that it's only accessible. We're looking to break down all that barrier, all of it. The stock market is not for an exclusive elite. It's not. It's actually more appropriate in the hands of people who deserve it the most. And everybody has the right to participate in the market. It's just that to not only participate is not good enough. You have to be able to participate and succeed. Okay. And succeeding takes discipline. So if you're not willing to find that financial discipline for yourself and you're just looking to play, maybe a little investing here, a little bit of dabble here, and this and that, and you waver across and back and forth and whoop-de-doo, don't freaking do it. It's going to be a waste of your time. But if you're serious, man, serious about defining a plan for yourself, I'm all about helping you. And but you got to be willing to help yourself as well. It's key. Okay. A balmy 20 night in Hudson Valley. Yeah, that's chilly. God dang, man. Just switched to TD and this happens. Laugh out loud, but it's okay. I don't know. I don't think a whole lot's going to change there, Lydia, with the merger. I think maybe things stand to get a little bit better, perhaps. Maybe. I mean, it's going to make the company a beast. It's going to be right behind BlackRock if my estimations are correct. It'll put it ahead of State Street, right behind BlackRock. I think it puts it right on par, if not ahead of Vanguard Group as well. So it puts it up there with the big boys. It's it's a big move for them. It was the right move. It was awesome. E-Trade's in trouble. I'd be worried if I was with E-Trade, but aside from that, I think it's a good move. The individual investor like yourself will be the one I think that benefits from it. So we'll see what happens. I think it'll be cool as well. So kind of scary that I'm starting to go back into the market at these levels. Yeah, that's a pretty legit comment. So Lydia Santiago offers this comment in the thread. I'll talk just a second about that. Don't invest out of fear. Okay. I think it's fair to say that the market, yes, is at levels that has everybody's attention. I think it's drawing people off the sidelines that are ill prepared to enter into the market. You don't have that problem. Okay. You know how important it is. I think, to really reemphasize the defensive strategy of using scale, using the opportunity. I know you have a great choice in automobiles in that you own the Toyota Tacoma, which is a pretty awesome vehicle. Pay down some debt, save some cash, invest in the market, yes, but don't overexpose to the market at this point. Not going to do anybody any good. Stock market's going to be here 5 years from now, 10 years and 20 years down the line. Doesn't do you any good to, again, make those decisions not to invest, perhaps by looking at this finite amount of time to make your decisions. And you've got one of the biggest advantages over a lot of people in that you're young. You have time. And I think a lot of people, when they get invested, like, okay, I've got a 20, 30, 40-year time horizon. Maybe I want to even invest for generational wealth. And they get invested that way, but then they waver in their program and they're like, oh my gosh, the market's down 20%. What the hell am I doing? Why did I do that? What the? And you start second guessing yourself a little bit. So you can't have it both ways. But I really think if you're looking to, one thing that helps me is if you look at my portfolio, I just reviewed the big number one. And if you review that, I kind of was kicking myself a little bit because I enjoy rolling out the percentage of exposure to each of the names. I own a lot of single stock. I own some pretty good positions in the Vanguard ETFs. But to give you some relative perspective, My biggest position right now is in the Vanguard's total market in the joint brokerage account. I own about $7,000 in that. That's the biggest position I have. Okay. Um, the VOO in the account I own about maybe 6 or 7,000 in that as well, pretty close to the same. Now this is in different buckets, okay? In mine, I own the VYM, which is the high dividend payer. I own about maybe $5,300 in that. And then the VYMI, which is the international dividend payer, own about 4,500 in that, right? So good grief. I mean, if each of those lost 100%, yeah, I wouldn't be happy, but we're not talking about wealth that is devoted to one specific asset. It's the total comprehensive portfolio. What am I getting at? If, for example, you wanted to invest in Pfizer right here, buy 10 shares. Okay, it's going to cost you $370. It's a starting position. With that starting position, you can start the dividend reinvestment, pays close to a 4% dividend. It is one of the dogs of the Dow this year. It's underperformed the market. That's fine, right? So you have some justification, but you don't want to buy 100 shares of it right here. So use some scale, put yourself in a position to maybe buy more Pfizer down the line, maybe 1, 2, 3, 5 years down the line. Maybe you dollar cost average it. Maybe you drip the holding for a while and just ease your way into the market, because I do contend that your concern is a real one. And I think a lot of people deliberate with the same thing that you're deliberating. I do as well. I'm not immune to this. I'm not, just frivolously throwing money at the market here with it up and it's high. I've done some strategic reallocation. Big difference. And that's setting myself up to be able to take advantage of a severe downturn or a gradual downturn, whatever happens. I think I've made some moves to make me a little bit more prepared to take that into a downturn and perhaps maybe set myself up for the next leg up. But I'll be investing throughout the entire time anyway. I'm not going to stop investing. So that's just the way of it. I got Travis Williams in the group here. So Travis Williams is also a channel creator. So anybody who's in here now or anybody who catches this after I post it live to YouTube, man, it'd be a favor of mine if you'd kick over and support Travis Williams here. Subscribe to his channel. He's got going on 400 subscribers, and I told him I think it'd be nice to get up to that first 1,000 mark. It was kind of cool because Dennis kind of made a comment on JMac Investing's live stream this Wednesday that kind of stuck with me. It approaches YouTube like an investment. And I thought that was really smart. And that's kind of my call out and shout out to you, Travis, for sure, is when you start, it goes up super slow. It's like, yes, I got a subscriber, and then you'll lose a subscriber. That's like, you'll notice that when you start. But if you stick with it for the long term and kind of incorporate your program in your life and just make it one of those things that don't ever do it for the money, because you might not stick with it. But if you do it because you enjoy it, it seems like you do. I was able to review a little bit of your content, but I was waiting for you to come on to provide you that shout out. So Travis Williams, you guys kick over and help support and build that subscriber base for Travis. That'd be awesome. Michael Raver, Mr. America, says dollar cost average. She knows. And she's got the tolerance as well, for sure. But yeah, it's been really tough on investors that have good investing discipline, but also want to be invested, but haven't really been provided very good entries as well. So it's been tough. We're making money. That's fine. Whoop-de-doo. But I think the larger question is, where's it going next and what we can do to set ourselves up for some of those defensive positionings. Wes Lawson says, what time, Ryan, tomorrow? Well, it depends on what coast you're on. For Lydia, it'll be 9 o'clock Western Standard Time. For me, it'll be 9 o'clock Eastern Time. So I will energize the live stream at around 9 o'clock. Hopefully everything works. That would be nice. She's probably sitting there like, Jesus, Ryan, really? No, I think it's all set up. I think it's ready to rock. So it'd be fun. It'll be fun. They typically are. Investing engineers says, "What's up? It's great to have you here. Appreciate you coming on and spending some time in the live stream on a Friday evening. It's really cool, really cool." Mr. Larry Massa, evening all. It's awesome. He says, "I'll be there. I know you will." Larry's been with me on the channel for a long, long, long time, man. He's one of those. When I had as many subscribers as Travis as well, a few hundred, I remember Larry. Larry was one of the first subscribers to the message, and I like that stickiness. I like that, man. Those old school plank owners with me. It's good stuff, man. It's nice to kind of live and grow with you guys as well, and you guys will get to observe how I change and evolve and how the portfolio is. That's one thing that you run the risk of when you throw your portfolio out there. But yeah, Lydia says tomorrow at 6 p.m. Eastern time. I was thinking it would be 6 o'clock your time, 9 o'clock Eastern time. So we'll work those details out afterwards. She's probably freaking out, like, oh my God, what the heck? It's changing the time on me. Nah, man, I'll just hit let's go live and we'll rock it out, okay? It'll be fine. It'll be fun. Thumbnail says 6 p.m. I know Pacific. Yeah, that's right. Greg Cammy's got it right. Do y'all think we peaked as far as market goes or see something to move it higher? Man alive, I tell you what, I got Brent with the financial investor here is asking the golden question. If I knew the answer to that, I would probably be a multi-millionaire. This market has done nothing but humble my thoughts of where it's going to go. You, me, and everybody else who thinks they know which way it's going to go. I'm starting to move away from that little philosophy. I just think that there's nothing good that comes out of that line of thinking. So I've deployed a little different strategy, one that is a little more in line with fundamental discipline. I'm going to invest what I want, when I want, how I want in the equities that I want, and that's going to be the end of it. I'm not going to be screwing around anymore. I've just started some positions in the Roths, the big ones. I'll declare those to you guys now. I just rolled out Roth IRA review this week. About 99,462. I'd really like to see that kick over to six figures. That would be an awful nice milestone. And I remember the 10, I remember the 25, the 50, and this 100 will be a nice milestone. That's a cool thing. If you started investing with $25 a month and you're like, wow, I'll never get there. And then here I am, because that's exactly what I did. I started with $1,500 in this very account. And here I am knocking on the door to 100 grand. Nonetheless, we picked up Nike this week, just 10 shares of Nike. So a starter position there, $900. Picked up Ross Stores, another starting position. You'll see a theme here with the discount brokers and the retailers. I did pick up Target and TJ Maxx. You'll see CRM Salesforce. That's the one growth name that I've been in and out of, but added that back in. And in the Roth IRA number one, I took profit in VOO, swapped it to the other Roth IRA. And here was my thought on that. I entered into VYM and I entered into VYMI. So those will be the strategic baselines in my Roth portfolio from here going forward. And 55 shares of the VYM, so a pretty nice little position in there. I've got enough cash in there to double up the position if necessary. I will be paid a dividend. It will pay a dividend whether or not it goes down 90% or not. But those are going to be my strategic positions. Why not the S&P 500? It's because I already own it in my TSP. Okay. So holistically, I've got a total market dividend paying ETF, international ETF. I still have the emerging markets in there. I still have the VNQ and I still have the VPU in there. Okay. So that makes up the passive base in that Roth, but I just thought I'd throw out those additions and the justifications behind those. Now, Roth IRA 2, I have not rolled out. I rolled out the portfolio review. It's filmed, but I haven't released it yet. But I will give you guys the inside sneak peek on Roth IRA number 2, starting with American Tower REIT. After this, I'm going to do my Gen X dividend investor guess of his remaining portfolio. I hope he doesn't mind, because if I hit it on the head and get them all, he's gonna accuse me of like collaborating with him and releasing all of his picks. But hell, for all I know, I'll get them all wrong. So we'll see what happens. But Roth IRA number 2, American Tower REIT, my absolute favorite in the properties space. Bristol Myers Squibb, ticker symbol BMY. Facebook, the other growth company in that portfolio. So one growth name in either one. I allowed myself the opportunity to live a little and have one in each. I did that. Home Depot there, and Lowe's. I would have preferred to split that, but I actually bought it in the wrong account. I screwed up. That's fine. So I just keep them both in there. I've got Lowe's there, Target, TGT, TJ Maxx, TJX. And finally, Walmart, WMT, a stock that's been on my conviction buy list for quite some time. These are all stocks that I plan on being super ultra long on. So these are fairly interesting, just starting positions in these stocks. They're all set up on dividend reinvestment, and we'll build those going forward. And then in Roth IRA number 2, I did not have any exposure to the S&P 500. So that actually, we restarted a position in VOO, just a starting position, not too crazy, but started in there. And that eventually will be the flagship account within Roth IRA number 2. So you see the contrast, right? VYM, VYMI in Roth IRA number 1. Roth IRA number 2 has the VOO exposure. And then the joint brokerage account, we added 2 names to that. Remember, my joint account was my fixed income. Okay. So my fixed income remains in that joint account, but on either end, I put 2 accounts. The first one is VEA, that's European ETF, total market, and then the total market VTI, which is my absolute favorite fund. But I have this in the joint brokerage account. So if I want to make contributions in greater amounts than what the cap to the Roth IRA will allow me, it'll allow me to strategically buy that at my disposal. I don't need to do it with new contributions, which the Roths are locked out right now. They have to be internally funded within the Roth IRA account. So I figured it was better to take that VYMI, and I'm looking to strategically build up my joint brokerage account. And ultimately, that may actually be the biggest account over time as I build that account, because there will be some single stock in that account as well. Stocks to own forever, right? Stuff that I'm not trading in and out of because it is taxable. Okay. But I thought a good base there would be to start with European exposure and the VTI in there. So that is the moves, guys. So minute and 12. Okay. I'm actually going to take a stab at the Gen X dividend investor. Now, I'm not doing this blindly. He did offer this opportunity to take a stab at this. Now, the irony in this is I own every one of these. Okay. So do like minds think alike? I don't know. I kind of went out on a limb on one of these picks. I'm not really sure. I wouldn't be surprised if he had it in the portfolio. I wouldn't be surprised if he didn't. Okay. But I'm going to throw out the ticker symbols and we'll see how it goes. Okay. I'm going to save this list and then I'm going to say, I told you so when he releases his videos, but we'll see. I think he owns Boeing. Okay. And I think he will probably do a sensational tutorial on Boeing. So that's number 1. I think Lockheed Martin. And I think 3M. Okay, so 3 industrials, right? Bang, bang, bang. I think he owns 3M. I think he owns Lockheed Martin. I think he owns Boeing. Okay, next is a discretionary with Coke. KO. Okay, it's a Dow component. Hasn't covered Coke yet. It's a little bit lean on the discretionary side. So I think probably ticker symbol KO. might show up in his portfolio. IBM, that's a little bit controversial, but I think IBM might be there. We will see. Okay. In line with maybe a dividend investment strategy, legacy business that's been around for a long, long time. I would look forward to tutorials on each and every one of these. But the next one in healthcare is Johnson & Johnson. Is already rolled out AbbVie, already rolled out Pfizer. Okay. So I think Johnson & Johnson might be one of them. We will see. The one that didn't make the list here is Merck. So we'll see. Microsoft. I think he owns Microsoft. That's just my guess. American Tower REIT. I actually think that Gen X dividend investor might have some place for, hasn't covered a REIT yet, unless he rolled it out on tonight's video, which I could be eating crow right now. Maybe he did a rollout of American Tower REIT, but AMT is the ticker symbol there. Cisco Systems, I think, might be a candidate there. United Technologies might be a candidate in the portfolio. JP Morgan Chase, biggest bank in the world. United Health Group, that might be another one. It's already covered Travelers Insurance. I think maybe UNH might be somewhere in there. Visa. This would be a tricky one because as a dividend growth investor, doesn't really fit the bill. So this probably is the biggest candidate not to be on the list, okay, is Visa. However, phenomenal business, and I know he's into great businesses and businesses that make money and are have stood the test of time and will stand the test of time over the long term in the payment space, okay? It's either Visa or American Express, but I say Visa. Finally, Walmart, WMT, and Apple. Okay, so those are my guesses. I thought I would throw those out there, and I offer that exercise just for fun a little bit. But I think for new investors, I think you can really accelerate your knowledge by surrounding yourself with the Dow 30. What I mean by that is just become familiar with the Dow 30 and then become familiar with the Dividend Aristocrats list. Those are two things that you can just Google. I've provided the knock list for you in the thread tonight, but that's a list that if you're unfamiliar with, a company like Leggett and Platt, which is it's one of his stocks, and it's on the Dividend Aristocrats list, and as well as AbbVie as well. Those are some companies that are on those lists that aren't part of the Dow components. So start to educate yourself up on some of those companies that are on those lists that you might not. There might be some companies on there that you don't recognize that you'd be surprised are on there. So that'll kind of help you make it a little bit more defined in your education on what type of stock offerings are out there. It'll just help you educate yourself up. But I thought that would be a pretty cool exercise to do, for sure. See you tomorrow. I got the Aloha State of Mind. Very cool. Also, one of my earliest subscribers, man. Holy moly. I owe a lot to you becoming a self-directed investor. Me and you had some good back and forth when you first came to the channel, man. I sensed that you were really interested in it and didn't know much about it. And you reminded me of me when I started. Like, I didn't know squat. I was like, what is this? Tell me about this. And some pretty cool stuff, man. And you don't owe me squat. What you owe me is the ability to succeed for yourself. Does that make sense? Did I say that right? Again, I contend that getting involved in a program like this, as intriguing and as good as it is, you have to be able to set yourself up not only to get involved, but to succeed at it. Okay. And your success is going to be long-standing over time. You don't get to look at it like we're talking now and say, hey, man, since I've been a self-directed investor over the last 3 years, I love it. I'm awesome. We want to make sure that we make that decision 20, 25, 30, 40 years down the line, depending on what your investment time horizon is, and that you reflect back on the impasse of you becoming a self-directed investor, and that the whole entire process was a good one, right? That you went through some trials and tribulations, that you were able to persevere past those times that I told you, in fact, will go through. You will. It's not a question of when. It is absolutely inevitable that you will absolutely go through those times. And that's going to be the key. If I've done everything that I can to help and support you in your capability to persevere past those times, then we're getting somewhere. That's success. That's what it's all about. But if it's all about and through charisma and yelling and screaming, I get you excited about investing only to become invested and then to scare yourself off of the market at the first sign of volatility, that's a waste of everybody's time. It's a waste of everybody's time. All right. Drip is such an amazing thing we have available. It's amazing when it's free. Again, I was really, it was kind of cool listening to Dennis because I know Lydia's done a collaboration with Dennis before too. It was good. Uh, but Dennis and the channel, some of the channel creators, some of the visitors in that live stream that JMac Investing puts on. For you guys that don't know, he puts that on Wednesday evenings at 8:30. So you guys are welcome to check that out. It's pretty cool. He collaborates with all kinds of different channels. Good grief. He's got a new channel on there every single week. It's pretty awesome. So, but yeah, the dividend reinvestment program is awesome. It's even more awesome when it's free of charge. And this is something that you just cannot appreciate unless you've got folks like me reminding you guys that those are functions of a financial planner's fee structure to go into that account and actually charge you to set up that dividend reinvestment program. If you don't believe me, check because it's still going on to this day, today. Guaranteed. Many of the big brokers actually still charge for that very service. And dollar cost average as well. That's another one. If you don't believe me, look at some of your statements. If I've got to one specific person by that statement and I've got somebody's attention by saying that very thing on this live stream, then it's worth it. Yeah, because it's not worth you paying for something that's free of charge now. Seems everything been on a tear lately. It has. It's been insane. It's been insanely good. It's been really, really nice to have some exposure to the market. The idea is to layer up, get some safety trades in there, some really good stuff. I told you guys 26 out of my 26 out of the 30 Dow stocks are in my portfolio. I have a significant amount more than that, right? Pepsi's not a Dow component, right? So, Pepsi's not, Wells Fargo is not, Citigroup, some of these other really good companies. None of the industrial defenses are in there. Raytheon, Lockheed Martin is not a Dow component. Northrop Grumman, some of these awesome companies. Lowe's is not a Dow component. Home Depot is. But still some really good companies. Royal Dutch Shell, Chevron is a Dow component as well as ExxonMobil own both of those. But just to give you an idea, I think the spackling of the Dow components within the portfolio really adds and solidifies the strength and the value in that portfolio. Man, it just reeks value. I mean, there's companies still out there that I would like to own. Clorox, Colgate, Palmolive. I think the other four are worth investing in, except for Walgreens Boots Alliance. I don't really like that company, but Goldman Sachs is good. Travelers is good, and American Express is good. Those are all great companies. So pick your investments where you will. I mean, you can win with a lot of these good quality companies. I think the real deficiency that a lot of people get into when they get into investing is that they think they need to outsmart the market. That this is what I'm talking about. And that they are their own worst enemy when it comes to the market. There are YouTubers out there, and you guys, I'm not going to name names, but they are their own worst enemy. They are. And I'm not saying that you can't enter into, I can't believe Tesla didn't come up in the live stream. I can't believe I'm the first one to actually say something about it. But had an interesting day today. If you don't know what I'm talking about, just Google Tesla's debacle today. It was interesting. I'll keep my Tacoma. Thank you. For anybody that knows what I'm talking about, you know what I'm talking about. Telling folks not to use a financial advisor and self-direct was priceless advice. You got to tell me why. So I've got aloha state of mind here, and you got to tell me why. Okay. It is priceless, but that validation comes through understanding, right? The wealth preservation piece, the liberating of those dollars. It costs me nothing to buy these 26 Dow components. I own them. I own them. There's no expense ratio at all in any of these. None of them. The dividends that are paid within there are mine. They're my family's. Okay. But I'm just trying to prove a point. Okay. I'm a generational wealth investor. Okay. I'm building the plan for the future because I really don't care about the money. I don't. Okay. I care more about the plan. And my plan is always being evolved to something to where I'm always trying to approach that perfect portfolio. Always trying. But your comment is so right that the more time that you have exposed in a self-directed Roth IRA account where those dollars, powerful dollars, have the chance to be paid to you directly or within the account directly to roll back in, compound on itself through a dividend reinvestment program with zero expense. None. None. There's no fees. Zero. None of which can take away from your annual compounding rate, your annual yearly percentage rate over the portfolio. Okay. And that is the key. That is the key takeaway to the opportunity that we put through on the channel. Good quality assets, lowest cost, if not no cost. Okay. Single stock ownership doesn't require any expense at all. That's kind of the beauty of it, to be honest with you. A significant opportunity to outpace the market over the long term. If you look at the long term compounding returns over a much broader time horizon, single stocks rock the market. It's amazing, right? So now you have to do that, holding that single stock risk for all those years. That's what people don't understand when they look at, the performance of a Southern company, right? That maybe outperforms at 800% over the last 15 years. I'm just using this as an example. And the S&P is only at 350% return. It's the amount of risk that you have to pay attention to over that time horizon when you're comparing those two assets, okay? A little less risk when you're talking about taking on a 350% rate of return, which you can win with, as opposed to the single stock that, yeah, may return hundreds of percents of return, but it may also, fumble. Okay. Companies go under. They become problematic. So that's the risk you take by going into single stock allocation as opposed to the diversified exposure in an ETF, because the S&P 500 is going to constantly be rotating out, 25, 30 companies that go under. Okay. And you're always going to get the best of breed represented within that 510 companies, which is where it is now. Okay. You're always going to get that. Okay. So it can always return you hundreds of percents, when in all actuality, you can only ever lose 100% if the entire stock market ends up losing all of its value and you lose all of your money. Okay. All right. Good stuff. I got Jared Odell in the group here right above. It's awesome to see you, my friend. Thanks for coming in. Energy is still down, picking up bargains there. Yeah, just, don't get too crazy. I think I would love to invest more in energy, but I'm a little overweight. I trimmed some positions, eliminated the Marathon Petroleum. I hated to do that because I like it. I do own Marathon Oil in the smaller first trade account, a significant amount less, a few $100s in that position. But I do like oil. It's a good opportunity to pick up some exposure. I do own the energy sector specialty ETF through Vanguard in the M1 Finance account. That is the only underperforming sector. You can check the account review that I did, and you'll see that in there. The VDE is the ticker symbol there for the specialty ETF that covers the energy sector. But that's fine. See those contributions go in there and they'll fund that lowest amount. Then energy will come into favor and start to outperform, and those contributed dollars will go to other sectors, always the lowest one. That's a cool thing if you stop and think about it for a second. And I know some folks have some problem with that. That's fine. It's just that I'm already invested in the S&P 500 in other ways, and this was the strategic way that I really wanted to grab the sector spider ETFs from Vanguard, and I thought it fit really well in the M1 Finance. And the verdict is still out. I think I'm onto something. Okay, I do. I think it's awesome. It gives me exposure to a lot of companies. Diversified? Hell yes. Do I get to invest a little bit more heavily weighted in technology, which is what I want, and a little bit less in materials? Yes. You'll see that reflected in that portfolio. I've left the link to that pie. If you guys are welcome to check it out, you can have it free of charge. You just look at it and you'll see how I'm exposed. If you don't want to do that, you can check out the M1 Finance review that I did this week for you guys. It was cool. All right. There'll be a lot of incentive to get people into advisory services now. That's an interesting comment, Greg. You're exactly right. High earners, not yet rich. They're going after the Henrys of the world. I heard that comment this week for the first time. I think you're right. I think aggressively going after those high income earners that don't have a lot of wherewithal about their finances, I think those folks are probably ripe for the picking for sure. There's always going to be a need for people out there who need financial services, but if you can break away from that, and I mean, for me, it's night and day. Okay, I can tell you how much I tried to succeed and do the right thing and dollar cost average. The damnable truth of the matter was that they were taking my money. Okay, I can't put it any simpler. So for me to come on and sit here and justify it and say it was worth the service and it was worth it wasn't worth it. It wasn't worth it. And I have the unique perspective of comparing the investor that I used to be to the investor now. Because I look at the investor now and I'm like, oh my God, if I would have had this information when I was 20, I'd be a millionaire. I'd be sitting on seven figures. I have no doubt in my mind if I had this information earlier. I started this at about 34-ish. I'm 42 now. I've been doing this less than 10 years, self-directed investing, going on about 9 years. 8? That's incredible. Incredibly short amount of time to have grown this much wealth. I came across some brokerage statements the other day that showed my portfolio value just a few years ago. And I was like, oh my God, that's how much I used to have. That's crazy. Like, how did we get here? And you just got to keep working at it, You got to keep working at it. And that validation, when you reflect back on it and you're like, whoa, look at those milestones. I had to pass through them, you know. I always try to keep my eye on the future, but man alive, it's just exciting. And you guys are going to have those validations as well. Just give yourself a fighting chance. Okay. And as time passes, it's not going to be those singular moments of time that you look at and say, yep, I'm so glad to be an investor. That right there is the validation that I need. I'm up $82 today. It's not going to come in that form. It's going to be remembering when you started your account with $1,000 starting capital, and now you're at $26,572. And you're like, dang, how did I do that? Yeah, that's what it's all about. Okay. Laugh out loud. Let's just keep it. Who wants to be a millionaire instead? Awesome. Good for you taking advantage of energy. I agree. Always have fun on the stream. It motivates me to leave work on time. Oh, she always gets stuck there you don't want to get stuck in that traffic, do you? It's pretty nasty out there. No, I miss California for sure. Awesome. TD also has great courses. Yeah, you had said that on your tutorial. I liked that. That was cool. So that, if it's not enough for you to self-educate yourself and really immerse yourself in that platform, this is something that the discount brokers aren't really going to have. And I made the comment to Lydia on the channel when she was doing the review that she's about to step into a different world of broker services. Okay. um, the big servicers. The tools that they have on those and the resources that they have available to you are second to none. They're really quite good. Nothing to be scoffed at. Whereas the discount brokers, I mean, you ain't getting that with Robinhood. Sorry. Hate to toot your own horn. I'm really not sure how Robinhood keeps its fame and fortune. I saw on CNBC this week for the first time, M1 Finance was listed on the screen. Nobody's ever said the word M1 Finance in my time watching CNBC. They always just mention Robinhood. That's it. But yeah, I saw M1 Finance listed for the first time on CNBC. So look out. Some interesting stuff, man. Um, I enjoy TD being using them for years, but did find there's a delay in it. Interesting. Yeah, first trade this fast. First trade is the fastest trading account that I have. And I like the fact that it's a margin account. They don't hit me. I've been guilty of free writing restriction with Merrill Edge ever since I've been with them. They must really love me. Hey, you got a free writing restriction. Hey, you got another free writing restriction. Hey, Ryan, can you stop free writing? Yeah, sure. Yeah, I got you, man. Leave me alone. I got plenty of money to cover what it is that you're telling me I'm guilty of. Thank you. I'm good. Once you start, you get addicted. It's as good a thing as any to be addicted to, I think. M1 Finance is great for ETF investing. So Kevin Glaudel, I couldn't agree more. I think that's a huge takeaway for anybody who's in the thread. There's 66 people in here right now. There will be a ton of visitors after I post to YouTube because a lot of folks around the world just can't tune in at the time that I post this at 9 o'clock Eastern time. But that is a very, very legit statement. I really contend that people who are going to get the most enjoyment out of the M1 Finance platform really look to prescribe to a passive, please, a passive approach. That doesn't mean that you can't buy single stock in M1 Finance. It doesn't mean that. Okay. But if you're going to buy single stock or if you're going to buy ETFs, please do so in a passive manner. It's not a platform that is conducive to buying in and out of stock, okay, or looking to generate wealth or building positions, taking swing trading positions. It's not going to work for you. Okay. You are going to get way more enjoyment out of it if you're doing something along the lines of what I'm doing or what I talked about at the top of the live stream, just entering into the S&P 500 and just investing in the M1 Finance pie. If you want to do, $10 a week, do it. $25 a week, do it. $25 biweekly. That's the schedule I'm on now. So I bumped it up a little bit. If you want to make those strategic fundings, you can do that. It's a good platform for it. Okay. But for example, the market was down yesterday. I put a $500 buy order. It bought this morning. The market was up. That's just one example, guys. I'm not making this up. Okay. It's something worth talking about. Because if I had bought when I wanted to buy the market yesterday, I would have bought at a lower share value. That's just the freaking reality of it. Okay. And that is a justified and warranted criticism of the M1 Finance platform. I didn't care so much because I was passively entering into the specialty ETFs with the sectors. So that's fine. Okay. I can stomach that. But what would really irritate me is if I was looking into buying, a Home Depot, for example, was down pretty big this week and couldn't get that buy opportunity when I wanted, and then it buys the next day at 10:30 a.m. or 10:45 a.m. or whenever M1 Finance decides to buy the stock for me, and I haven't got it at that optimal entry point. Okay. It's a real criticism of M1 Finance. I really hope they do fix it. I do. I don't know if they will. And I don't know if the platform is conducive to trying to fix something like that and being more of a full service broker like a Schwab or even a First Trade, quite frankly, from the perspective of buying stock and doing so super fast. Their mobile app is incredibly fast. When I execute orders on there, it's almost instantaneous. It's really good. All right. Yeah, Gen X dividend investor. I hope he doesn't realize me declaring his portfolio for him. He's probably laughing actually because I probably didn't get one stock pick right. I hope I did because there's some pretty freaking good names in there. Or I don't know what I'm doing, and because I do own every single one of these names, all of them, all 15. I wasn't kidding about that, but if he doesn't invest in at least one, I have to get at least one of them right. I'm gonna I'm gonna second guess my strategy. Like, I don't know, man. Maybe I shouldn't be investing in Boeing. I don't know, man. They make airplanes really, really well, but I don't think it's a good holding to have in the portfolio. Hope all is well with you, my friend. Hope all is well. Thanks for all the support. And again, thanks for putting out such quality content, man. It's legit. It's really quite good. Greg Cami says valuation. J Mac, that was a killer video on Five Below. Rock on. I didn't catch that. Appreciate you throwing that out there. All I want for Christmas is dividends. I like that. That's good. So Gen X has just popped in here, starting some convo with the folks. I really enjoy that. Definitely one of my featured channels, and I feel humbled enough, honestly. So, dividends for Christmas sounds awesome. Hector Mendoza's in the group here. Awesome. You have to put emotion to the side. The legal world made emotions less. That's why I do okay. It could be. It could be. I just there's a lot discipline, perspective. Um, trying to put assets in the account that are easy to invest in. I mean, guys, 26 out of 30 Dow components are in my portfolio in some form, about split between me and my wife. Those aren't that hard to invest in. People think that you have to outsmart the market, and I don't do as comprehensive a review as a Gen X dividend investor. That's why I love his content so much. I think it's wonderful, but I don't. You know, is it because of that evaluation over a stock that you determine to take the investment or not? In his case, I would contend yes. I believe that deliberation is absolutely something that he has done. I've succeeded in stock market and in the stocks I invest in by not doing that. I don't do that level of about. I don't know how. I don't know how the hell he does it. It's unbelievable. And I'm gonna spend some time trying to learn what it is that he's talking about in the evaluation. You can't find information that amazing unless you want to pay for a course. And there again, I would contend that the information isn't even that good. So again, I always give the shout out because I'm the guy that just deserves it. It's really awesome. It's really teaching some really good stock fundamental analysis, and it's amazing. It's helping people. He's not charging people a dime for it, but the information there is priceless. It is. It's really good. Honestly, I'd be happy with 3K a month in dividends. I could retire from the 9 to 5 with that on my 3,000 a month. Jesus, man. I, uh, I could live on a few $100. I find it funny, these folks that are talking about minimalism and all this stuff, and I hate to point out my boy Scribner. There's no way he's on here right now at an hour and 41, but, his video this week on, he bought a Rolex. Is a Rolex a good investment? I watched it, it's interesting, but I kept thinking in my mind, how is this in line with a minimalist you know, lifestyle? I just kinda laughed a little bit, you know? I don't wanna buy a Rolex. I have no desire, and I know Gen X dividend investor bought one too, and he got a bonus or something. It's a cool comment, you know? And that's cool. I'm all about success for people, and if that's your thing, that's awesome. I love my Citizen watch. I bought it 6, 7 years ago, for $275. It was worth $675 at the time I bought it, and I wear it every day. So that's an investment right there that pays me back. I know it's a maintenance-free watch. I don't pay for servicing on that. I don't pay for a battery because it's powered by the sun. It readjusts my time from a satellite every single night. So to each his own. To each his own. So anyway, continue to scroll down here as we start to wind down the live stream 73, man. It's been a lot of fun for me tonight. I really appreciate you guys coming on and helping me support and enjoying this. We're going to double dip again tomorrow with the live stream, the collaboration, 9 o'clock Eastern time. It'll be 6 o'clock on the West Coast for all you guys in the group here from California. So cordially invite you guys to come on, spend a little time supporting. And that'll help Lydia boost up and get over that 2,000 subscriber mark as she's marching toward it. She'll be there eventually. But it never hurts to have a little infusion in the channel, and that's exactly what we're going to do. Hopefully, I can motivate more girls to invest. I don't know. Yeah, that's it's super important, I think. I think I was making the comment, I think, at the top of the live stream. The women that I know that do invest, they're phenomenal investors, phenomenal, because they bring things to the table that men don't bring to the table. That's the reality of it. You want to sit here and tell me that men and women are the same? Not me. You can try to sell me on it, but they're not. We're completely different. Okay. If you want to know the reality of it and you struggle with this, we're completely different. Okay. Just going to leave it at that. But yeah, I think it is important. I think, for anybody that's looking to start a professional career, uh, get in that mindset of putting some of that money aside, and getting into some financial discipline, I think is wonderful for anybody starting out, young professionals. It's the hardest time to get to young folks because they are so too blocked. But man, if you can provide that referral, that's really where the stewards of the message that come on subscriber channels like JMac Investing and Gen X Dividend Investor, and they're consuming this content, and Brent with the financial investor. These guys, though, if they come on and they relate to you and they're like, man, this is awesome. I'm excited about investing. Those are the folks that go out and they share that message with the friends and family. I think that's even more powerful than trying to cold call somebody, or, turn them on to investing when they're not ready, or try to force feed somebody. Everybody who comes into the live stream does so electively. That's the cool thing about it. And if you really liked somebody, or you had a work colleague or a friend or a family, and you were like, hey, watch my channel, but if you want to come on and check out this individual or this individual, hey, I know this guy, the independent investor channel, come on, take it a chance. If you don't like it, turn it off. You don't have to waste your time with it, but maybe you do. Maybe you'll find out something about yourself that you didn't know was there, or was there all along, but we just kind of helped foster that intrigue about getting involved and getting a financial program started for you. Pretty cool. Yep, excited for the day when the portfolio is large enough where it buys decent tranches of stocks during dips on autopilot like Matt Money's or Gen X. You'll be there, man, for sure. That's awesome. Thanks, Doug. Hope you're having a great day as well. Where's Dividend Doctor? I got Poke in the group here. I just saw Matt Money. We just talked about Matt, and I just saw Matt kick in here for the first time. So give a shout out to Matt Money as well. He's at the bottom of the thread. My brother, you got to sneak in here at the start of the live stream. I'll give you a shout out at the top, man. I'm giving you a shout out here when I'm about ready to sign off. For that, I apologize, but Matt's cool. I just got to know Matt over the last couple months, and he's part of the family now, and the investor family. It's nice to see some of those mature portfolios. And that way it's a good mix of opinions from folks with mature portfolios, like Matt and Gen X and myself, folks that have been investing for a while, and also some of the folks that are getting involved with the market maybe for the first time. I think that holistic perspective is important, and that way, you can see what's possible. You look at a portfolio like Matt's or Gen X or whatever, and maybe you can see things that he does that you really, really like, and you can maybe prescribe to some of those philosophies about how he seeks exposure. Okay, make no mistake, this is all about just uh, combining assets within a bucket and seeking your exposure to the stock market. I don't mean to like impugn There is no magic portfolio out there. Okay, trust me. He's got BHP Billiton in his portfolio. I've invested in it as well. Um, but I think the cool part about it is to see different ways of exposing your dollars to the market, and it's really cool to have these guys in the group here, part of the family and part of the community. It's good stuff. But Matt, you get your call out as well. But you gotta show up. Drop your icon at the beginning of the live stream and then leave. That'll remind me, and I'll get you your call out at the top of the stream, man, and get you some exposure. I've got about 1,000 people reviewing these live streams after they go to YouTube, so and I don't mind doing it. So we're kind of at the bottom here. I'm scanning up through. There's just way too many comments now for me to get to, but I will sign off because we will be providing another opportunity tomorrow through the collaboration with Lydia Santiago, my investment journey. Looking forward to that. Really appreciate you guys kicking on here, man. It's super, super fun tonight. Had a great time. I hope you guys always continue to strive toward the goal that I insist that we should all be striving for, and that is to find your own pursuit of happiness. Your own. Okay. Find your own passion for why you do this investing gig. Keep it in perspective. Okay. Investing shouldn't be one of those things that consume your life. It should be just an aspect of your life. And if you're doing it right, it should be a pretty small aspect of your life. Work really, really hard at the onset to get this stuff right. And when you do, it'll free up your life to do a whole hell of a lot of other things. All right. Other than sit there and stare at your portfolio. Guys, thank you so much for coming on. We will catch you tomorrow when we re-engage on the collaboration. So good to be with you guys. And we will check you guys tomorrow. Take it easy. Have a great, great weekend.